What's going on, guys? In this video, we're gonna talk about the current market conditions if we are heading to a market crash. In this video, we will talk about the few articles that has something to do with the market crash, and also we'll try to check on the technical analysis whether there is really an impending market crash and whether we will also be able to recover from this in a technical analysis perspective. So guys, if you like the information and analysis I'll be providing in this video, please hit the like and subscribe button. Let's get going. So guys, as you can see here, even the smartest among the smartest who has the highest convictions is not an exemption with the current market conditions we have right now. It says here, ARK Invest's 75% decline in its flagship ETF hasn't stopped investors from pouring $1.3 billion in the fund in 2022. Okay, so ARK Invest's flagship ETF has enjoyed net inflows of $1.3 billion so far in 2022, despite a sharp sell-off in the strategy. So I think everybody knows that Cathie Wood have sold some of her Tesla and went to pour it in some investments like Teladoc, for example. Okay, so it says here that the ETF was down another 5% in Tuesday and another 10% today, which is Wednesday. That's despite the fact that ARK Invest Disruptive Innovation ETF has sold off 75% from its record high and is down 58% year to date. So the ETF was down another 5% in Tuesday trades and fell below $40 for the first time since April 2020. But by the time of this recording, guys, this ETF is only trading for $36.93. So if you scroll down here, most of our stocks are not in broad-based benchmarks, she said, but that could be a double-edged sword as stocks are excluded from indexes, see little to no buying pressure from the millions of passive investors that dollar cost average into the stock market via their 401k every 2 weeks when they get paid. So guys, we'll try to take a look what is a stock market crash. So it says here, guys, a stock market crash refers to a drastic, often unforeseen drop in the prices of stocks in the market. The sudden drop in stock prices may be influenced by economic conditions, catastrophic events, or speculative elements that sweep across the market. So economic conditions, I think the best example regarding economic conditions is what we have now, right? So the Feds have been pumping money in the economy of US in the past. Of course, they have to pay for that. Catastrophic event, the perfect example for that is the COVID-19 that happened in the 2020. So also it says here that a black swan event, a phrase commonly used in the world of finance, is an extremely negative event or occurrence that is impossibly difficult to predict. In other words, black swan events are events that are unexpected and unknowable. The term was popularized by a former Wall Street trader, Nassim Nicholas Taleb. Okay, so that's just so you guys know what a black swan event that the apes are talking about in the past. So a stock market crash occurs when the market has entered an unstable phase and an economic disturbance causes share prices to fall suddenly and unexpectedly. Historical stock market crashes in the US occurred in 1929, 1987, 1999 to 2000, 2008, and 2020. Following a stock market crash, a panic trading can be prevented by triggering market-wide circuit breakers or adopting plunge protection. Also, it says here, there is no conventional way of describing a market crash, but the term commonly applies to an abrupt decline in the stock market index over a single or several days. Stock market crashes have severe effects on the economy and investors' behavior. Essentially, the overall economy of a country depends on its stock market. So we can see that right now, the market, right, the stock index are declining, and of course, we are also seeing that with the behavior of the participants, which is the retail investors and the individual institutional investors alike. So we can that's no-brainer. Everybody can see that right now in the market. So with this current market condition, I would like to compare it to the stock market crash of 2007 and 2008. The 2007-2008 stock market crash was triggered by the collapse of mortgage-backed securities in the housing sector. High frequency or speculative trading caused the securities rise and decline in value as housing prices receded. With most homeowners unable to meet their debt obligations, financial institutions slid into bankruptcy, causing the Great Recession. So guys, I think right now what we have is the hedge funds buying stocks using margin accounts. So I think that will have a huge impact with market conditions right now. Most of them is buying on margin, unlike retail investors, so who normally buys stocks using their cash accounts. So over time, with these kinds of market conditions, if eventually we'll keep on going down with these indexes, definitely guys, we can see the rippling effect across sectors, across different financial sectors, including including other countries. So definitely we'll be seeing that in the future. The COVID crash of March 2020, the market collapse in 2020 was caused by the government's reaction to the novel COVID-19 outbreak, a rapidly spreading coronavirus around the world. So that's one of them, right? So guys, we have experienced this, and I think this was the first time I wanted to go ahead and trade in the stock market, but I was unable to do so because, of course, what the banks do is, I mean, the banks want you to go to a financial advisor, right? Back then, I mean, people are still hesitant to use these online trading platforms, but right now there's a lot of trading platforms. You can make your own ETF, right? You can actually invest in any company you want. Okay, so that will also have a impact in the current market conditions we have right now. As you can see, guys, the people they contribute so much with the with the market, right? Because you can buy anything at the in your fingertips, even though in any place you want, right? In any place, wherever you are. So whether you are sitting in your car, whether you are in your house, you can buy any stock you want. So with behavior of the retail investor right now, of course, I would assume that people are currently scared to invest money, but those who have already invested are probably it's either if they fear the markets, right? So they might have sold already, or some of them might have been negative 90% in their portfolio, right? They just leave it there, right? So definitely, like I said, whatever the market condition is, the market will definitely rebound. Okay, so we will see that later. We'll check that later with the S&P 500. What we can actually see in the charts, and we will compare that to the current market condition that we have right now. So 2008 versus the 2022 market conditions. There you go, guys. Also, in this article by Wealth Simple, it says here, how to prevent a stock market crash. During a stock market crisis, panicked stockholders tend to panic sell their assets to cushion themselves from further losses. Several stock market safeguards are in place to curb heavy losses that occur during panic trading. Some of the actions include the following. So number one here, guys, is circuit breakers. Current guidelines by the U.S. Securities and Exchange Commission mandate market-wide a 15-minute pause in trading in certain situations in the hopes that the market will come. The circuit breaker activates when the S&P 500 falls more than 7% at any time before 3:45 Eastern Time. So we haven't seen this yet, guys, the 7% decline of S&P 500. So, but today, definitely the S&P 500 declined 1.59%. So next one is a plunge protection. Turbulent markets can also be dampened by the purchase of massive quantities of stocks by large entities when prices drop. By so doing, established entities hold prices up to prevent individual traders from panic trading. This method is limited in its effectiveness. So those are the two things that the SEC or the governing bodies use to actually prevent stock market crash. So instead of them, so if there's any market crash, as you can see, if you have observed the prices of these stocks, they went down slowly. The SEC or the governing bodies like NYSE, right? They can't just put them all in one big swipe. Okay, so they have to put them in increments, and as you can see, that's fairly proven today. I mean, in the past few days, in the past few months, they put them in certain percentages, right? So you would have observed that. So even big companies have felt that. Some of them have declined 50%, 60%. On some of them declined 90%. So we can all see that. So guys, this is the chart of S&P 500 ETF from 2008 up to 2022. Okay, so guys, as you can see here, in the 2008, the S&P 500 declined from its from the 200 EMA. okay, but it definitely bounced back. Okay, so and this is on 2011, so there must be something might have happened also in the 2011. So but it bounced right up in the 200 EMA. So if we scroll down a little bit further, I assume this is the 2020 the COVID-19 the pandemic stock market crash. Okay, so we're getting there, guys. Okay, so there's still some a few numbers that we need to get into before we could probably say definitely that we are in a stock market crash. So there's two things that you can do for you to be able to safeguard yourself against this. So if you're holding an asset, so I think all you have to do, guys, is to hold the asset that you're holding. Okay, definitely it will rebound, right? But of course nobody can actually tell what's the lowest number that we will actually have in this stock market crash. But like I said before, definitely we will always rebound. So if as you can see, guys, this is the S&P 500 ETF. Okay, so if we go back to 2008, 2009, right? So we were once in the oversold section. So definitely somebody needs to start buying these stocks. Okay, so and it will definitely rise once again. So that's the first example here. So we got in an oversold section. Once it goes through the oversold section, so that's the lowest point right there, but it would definitely bounce back. Okay, and okay, it will keep on bouncing back. So if we go back to the 2000, this is the 2020. Okay, so it went once again to the oversold section and it bounced back once again. So right now we are RSI for this index ETF is 31.60. If we go a little bit lower than that, okay, it will still bounce back. So guys, you can also use this as your indicator whether you want to go back to the market, whether you want to go and try to reinvest once again. So one more thing, as you can see, guys, here in around 2019, something might have happened. There's an incident also where the market almost crashed, but it went back up once again. So guys, I think there is nothing to worry about. So if you're like I said, everybody is an emotional investor, but definitely there's no need to sell the securities that you're holding. But of course, if what you have is a speculative investment, say for example, those stocks that are penny stocks, right? That haven't been doing any revenues yet, stuff like that. So of course, it might go underwater. They might go bankrupt, stuff like that. So we would be expecting that in the next few weeks with these kinds of securities. But for those securities that are actually that we all know that you have high conviction that will definitely do well, I think there's nothing to worry about. Just hold on to them. Once again, they will definitely go back on their feet. Okay, guys, if you like the information and analysis I have provided to you in this video, please hit the like and subscribe button. Once again, this is your boy Don Leo Trades. I love you all. Keep safe and peace out.